over to Anthony Waller. Hand over to Anthony Waller, who will take you through tonight's episode.
Hello, everyone. Thanks, Dave and Alex, for inviting me to speak to you guys today. So I'm Anthony Waller. I'm a director in the business rates team at WSP GL Hearn. Our speciality is business rates, and I'm the head of the licensed and leisure team within WSP GL Hearn. So I get the pleasure to value pubs, rugby clubs, and anything else that's sports or leisure related. So today, what we're going to talk about is your rates liability, your rates demands that you all received, and then a little bit about how a rateable value is determined. I'm going to split it into two parts. So the first part is going to be about your rates demands, and that is just to make sure you're paying the right amount. And then the second, we'll have questions after that part. And then the second part will be about how the rateable value is determined. Some of you might not be interested in that part of it. So that's why we're putting that part on second. Okay, so WSP GL Hearn, we're instructed by the Rugby Football Union to provide you guys with some advice. WSP is a large engineering company based in Canada, and we are their property advisory arm based in the UK. GL Hearn have been around for over 100 years, providing expert advice to all sorts of properties. We've got clients such as Boots, Tesco's, Selco, Royal Mail, all sorts of people all the way across the UK we provide advice to. And we have have specialist advice as well. So just to give you some background to business rates, business rates are a tax on the occupier of a property, or if there's no occupier, the owner of a property. They're a very important part of the Treasury revenue, and they raise around about £37 billion per annum. It's a tax that the government really, really likes, simply because it's difficult to avoid paying business rates, because you can send the bill to the property and generally you know who occupies it. So they quite like it, and they like to take more and more money off of people. There are around about 2.15 million non-domestic properties across the UK. And then they're also, on top of that as well, there is council tax that you would pay on your residents as well, which is slightly done by the same people, but a slightly different tax. And the table there in front of you just gives you some idea of the amount of business rates in comparison with the other taxes that people are raised. So the reason we're talking to you today is on the 1st of April, so as of Wednesday, the business rates, every property in the country has been revalued by the Valuation Office Agency to give a new rateable value. And that means that your rates liability is extremely likely to change on the 1st of April. What you may have at the moment is, because you are sports clubs, you will have within your rates liability a 40% relief for the fact that you are a retail, hospitality or leisure occupier. Now that relief, as of the 1st of April, is going to be taken away, and instead it has been replaced by a different multiplier. So historically there's been two multipliers, one for properties with a rateable value of under 51,000, and the other for properties with a rateable value of £51,000 or more. But as of the Wednesday, that will change. There will now be 5 multipliers. There's multipliers for occupiers or businesses which are in which are in the retail, hospitality and leisure sphere. And again, if they're under 51,000, they will pay one rate, and if you're above that, you'll pay a different rate. And the table that I'm showing you on the right hand side gives you the different multipliers that are on there. The most important ones for you guys are going to be the ones in bold. That is, if you have a rateable value of under 51,000, you'll pay 43.2 pence in the pound. Sorry, 38.2 pence in the pound. And if you have a rateable value of 51,000 or greater, you'll pay 43 pence in the pound. Okay, so that is the regime. The other thing that the government have brought in, and they do this every time there's a revaluation, is if your rates liability as an occupier will increase, they put a cap on the maximum it can increase, and that depends upon how much how big your property is, and they will tax the people with the higher rateable values can be expected to pay a higher proportion of their increase in the first year, and that changes from year to year. Don't worry, I'm not going to test you on the percentages or anything like that. That's just on the screen for you to give you some idea of how it is created. So the things that you can do on your rates, if you've got your rates demand, firstly is to check that you have the right multiplier. So you should either be charged at 38.2 pence or 43 pence, depending upon your rateable value. And I'll get to the rates demanded, rates demand in a moment to show you where you might be able to find that. But what you will find is that one of the main ways to mitigate your rates or to make sure you're not paying too much is if you're a community amateur sports club or a registered charity, you are entitled to 80% relief from your rates liability. So 80% relief if you are a community amateur sports club or a charity. So if you are one of those, the council won't automatically know that. You will need to tell them. You must be, if you're a charity, you must be registered with the Charity Commission. Similarly, with the Community Amateur Sports Club, you must be a registered CASC in order to claim it. But if you are, you just need to go to your local authority. You'll be able to find their details online, and most of them will have an online form that you can complete, and they will automatically apply that 80% relief. Now, some councils will offer a discretionary additional top up of the additional 20% so that you have no rates liability at all. This used to be more common, but you're probably all aware that a lot of councils are struggling financially at the moment. So there are fewer and fewer councils who are prepared to offer this additional relief. However, if you already had the relief, they don't generally take it away. But that's one big thing. If you are, or if you are thinking about being a CASC and want to register, please do so. But you do need to tell the council that you are, and then they will apply the relief. The other relief that will appear on lots of bills is this supporting small business relief. Now, this again is a new relief, and what that is the cap on the maximum your rates liability can increase from year to year. If you already had the retail, hospitality and leisure relief of 40% in the previous financial year, you're entitled to the supporting small business relief, which means that when the council calculates your rates liability, they start from your actual payment for last year. If you don't have that relief, if you didn't claim that relief, that 40% relief in the last financial year, your liability starts from the notional payment, which is the payment without the relief. Okay, so if you've got it, you just need to check that the council has the supporting small business relief applied on your demand. Okay, and so as I said, it's capped. There is a minimum amount of increase that you must pay, though, which is £800. So if you've got a relatively small rates liability last year of, let's say, £1,000, if it's capped and you can't increase by more than 15%, that would mean £150. £150 addition, but there's a minimum of £800, so you would go straight up to paying £1,800 for the next year. Okay, so that's supporting small business relief. So now let's look at a rates demand. So first thing I will say is not all rates demands will look like this. But there are 300 plus councils all the way across England, and they all use different systems in order to produce their rates demand. So if you've got a rates demand for your local council, it won't be the same as a rates demand, or it's unlikely to be exactly the same as a rates demand for another council. So don't, if you've got your rates demand to hand and are looking at it, don't be surprised if it doesn't look exactly like what's on the screen. Okay, so usually at the top of the page, which I haven't put on here, or sorry, at the top of the page is a section which tells you about the property. So you'll have a section which is your property address. That section says property giving rise to change. That's your property address, and then a property description, which will say something like rugby club and premises, clubhouse and premises, sports club and premises, or something like that. To be completely honest with you, the property description doesn't really make a lot of difference, but it's just on there to help guide what should happen. And then close to that will be your account number. So there are usually several numbers on the demand. So as well as an account number, you might have a billing authority reference number, and that's a unique number that billing authority or council would use to reference the property. Whereas the account number is the account related to you as a club. Okay, so when you speak to the council, you need to give them the account number. Now, and then also there it should give you in the bottom left hand side your rateable value. So the rateable value of your club for the 2026 rating list. And I'll show you where you can find that shortly. If it's not on your bill, you can find it online. Well, it should be on your bill. You can find it online as well. And it should also tell you on there which multiplier is applied. Now, you can see there's a box on the bottom right which says latest year transitional calculation. Don't worry about the calculation too much, but that is where I was talking about the maximum amount that you can increase your rates liability by. It's worked out in that section. Okay. So that will give you some idea of what the top part of your rates demand will look like. The second part will be the actual calculation itself. So you can see here on this, or hopefully you can see it. It might be a bit small depending on the size of your screen. You can see the charge for the period is on there, and the period that you'll just got it for will be for the 1st of April 2026 to the 31st of March 2027. That's the 2026 rates year. On this particular one, you can see the charge for the period is the rateable value 28,750 multiplied by the multiplier, which is 0.432 in this case. Okay. So me looking at that, if I was a rugby club, I would say straight away that is the wrong multiplier, because as a rugby club, it should be 0.382, where the rateable value is less than 51,000. Okay, so that's something for you guys to look at. Does the multiplier match? Is it the right one? On the right hand side, it's got how much you owe, and you will have on this year's demand a transitional relief supplement. Everybody is paying an extra 1 pence of 1p in the pound of their rateable value. So in this case, 28,750 times 1p is £287.50. What you will also see on this is if you have any reliefs that you're applicable for, like the CASC relief or the charitable relief, the calculation will be on here, and it will usually be shown as a negative figure in the amount you owe. Okay, and then what it will also give you is your instalment plan. So most councils will automatically invoice you or ask you to pay in 10 instalments, with the first instalment being slightly different figure to the next 9 instalments. Every ratepayer has the right to ask the council to make their payments over 12 months instead of over 10 months. Up to you whether you do it. You have the right to do it. The only time a council will refuse if you have a history of poor payment. But you can do that if that helps you spread your costs out. Otherwise, you will be billed from April through to January and have no payments to make in February and March. If you ask over 12 months, then obviously you will also pay in February and March as well. Depends on you, depends on when your income comes in. It might be convenient not to pay in February and March, or it might be convenient to pay an equal amount over 10 months. But that gives you your instalment plans on that page. So here's a bit of maths for everybody, or for me to run through with you to give you a rough idea. And this is trying to explain how the calculation will work when your rateable value has changed a lot. Okay, so the first example, got a rugby club who had in the last list, the 2023 rating list, a rateable value of 25,000. But for the 2026 list, the rateable value has gone up to 75,000. A big increase in your rateable value. Just to give you a background, your rateable value is supposed to be the amount of rent that somebody would pay to rent the premises. Okay. So that is how that's what the valuation was done in that case. So in this particular one, that property isn't, so that rugby club is not a charity or a CASC, Community Services Sports Club. So they haven't got the 80% relief. But they did, in the financial year 2025-26, receive 40% retail, hospitality and leisure relief. So what that means is that we can calculate their liability as it is done there. The 49.9 pence is the previous year's rates multiplier. We know that they would have paid £7,485 in that financial year. For 2026-27, based upon the 75,000 and in applying 0.44p, that comes out at 33,000. So it's 0.44 comes out at 33,000, but it is capped at a maximum of a 15% increase. So the actual amount they pay will be 7,485 times 115%, or £8,675. Sorry, £8,607 and 75 pence. Okay, and in this case, that is the 15% increase is not greater than £800. Therefore, the 800 minimum increase of £800 kicks in, and the rates liability for the year will actually be £8,285. Okay, so we're taking you through these examples not necessarily so that you can completely understand how to calculate them, but more to give you an idea that they aren't a straightforward calculation for you to do. So they are there. You can work them out. The council will have done it for you, but the council may make mistakes. Or it may be that you will look at it and go, well, I can't work out how they've done that. And some councils' rates demands are better than others in explaining to you how they've reached their calculation. Okay, so if we move on to the second example. So again, we've got a rateable value in the 2023 list of £12,000. And in the 2026 list, that's gone up to £48,500. And this property is a charity, and also had the 40% relief in the 2026 list. So their actual payment in 2025-26 would have been £718.56 with all of those reliefs brought in. So their annual bill, £718.56. And again, we look at how they uh, um, how they work out the bill. So in this case, the is based upon the based upon the multiplier, but the mandatory relief kicks in first, and that makes the maximum increase up to £1,377.24. And because the mandatory relief has kicked in, that means the increase is less than £800, and that's allowed in this instance because of the mandatory charitable relief. So as I said, they aren't unfortunately, the government, in trying to help people, has actually made the calculation of your rates liability much, much more complicated than it used to be in the past. Okay. So what are the key takeaways for you guys? So first one is check your multiplier. So look at your rateable value and then look at the multiplier. Make sure if your rateable value is under 51,000, that your multiplier is 38.2 pence. And if your rateable value is 51,000 or more, your multiplier should be 43 pence. That's the first thing to check. The next thing to check is if you are a community amateur sports club or a charity, if you qualify for either of those, make sure you have approached the council and got that 80% relief included in your bill. Okay, as I said, the council won't know. You need to tell them that. If they'd already applied it in the last list, you're safe. They should know that they can apply that. But if you haven't applied for it in the past, do apply for it because it's 80% reduction in your rates liability. Okay. If you received the 40% retail hospitality and leisure relief last time and were not a charity, then you will get the transitional relief or the supporting small business relief, the transitional relief in your 2026-27 bill, and that will show as a line on that bill of the supporting small business relief, and that will be a limit on how much it can increase by. As I said, the limit is a minimum of £800. Okay, so don't be surprised if it's £800 that your rate is increasing by. Okay, and then the final thing to do is review your rateable value on your bill and make sure it matches what it says in your 2026 in the 2026 rating list. And I'll show you how to do that shortly. Now, obviously, I've been through this and it's not straightforward. The calculations are not straightforward. So the RFU have asked us to set up a helpline or a help email address, which is shown on the screen as rfu.rates@glhearn.com. And you can email us with a copy of your rates demand and we will look at it for you. Okay. There's no charge to you as the rugby clubs for doing that, and we will run through it with you. If you've got other reliefs that are showing on there or if things don't work, we will tell you what to do. If they've got the wrong multipliers on there, we will help you do that. What we can't do for you is apply to the councils on your behalf to get things changed, but we can direct you or inform you of what you need to do to go to the councils to get things looked at. Okay, so that's the first section, which is about rates, liabilities, and rates demands. So we'll stop there. And if there are any questions, I'll be happy to answer them. Dave.
Well, firstly, if there's any questions on this particular section, please pop them into the Q&A. And if not, we'll move on into the next section. But I suppose I've got a question listening to that, Anthony. which made perfect sense. But the transitional reliefs that you refer to, which is obviously you say the government trying to help, but obviously making it more complicated. Are they transitional reliefs that only apply for this first year of the new system, or is it something which will be applied each year?
Yeah. So the transitional scheme has been set by the council, and it will it for the so the your sorry. Let me start again. So your 2026 rating revaluation period will last for 3 years, and there'll be another revaluation in 2029. But during the life of this revaluation period, so for the next 3 financial years, the transitional relief will limit the amount you can increase from year to year.
Okay.
So in the first year, if you're a property with a rateable value between 20,000 and £100,000, that is a 15% increase. But in the next year, it's a 25% increase. So
Okay.
the amount that you pay, it's the step you into, you like, how much extra you pay each year.
Okay. All right. No, it's that. Yeah. Okay. That makes sense. 3 years and a transition on each year. So it's going to go up. It's basically, well, in most cases, it's going to go up.
Yes.
Okay. Look, there isn't any other questions in the Q&A at the moment, so I'd move on to the next section, Anthony.
Okay, good. Okay, so this is the part which is about your rates demand, rates liability. I'll show you how to find it, and I will tell you a bit about what it involves, what's in your rateable value. So a rateable value, as I said earlier, it's the valuation office's estimate of the rent that will be paid for the property on the open market between a new tenant and a landlord. Now, with rugby clubs, we've got a lot of them being charities, they're assuming that the rent will be paid by potentially a professional club rather than a charity club, which is why the relief kick for the charities kicks in at 80%. I've already spoken about why it's changing on the 1st of April. That's because there's a requirement for the valuation office to revalue all properties every 3 years. How's it determined? Okay, well, as it's supposed to be the rent that we'll pay, the VOA should base their values upon rents that are paid for rugby clubs or other sports clubs for their facilities. So if you pay a rent to the local council or to a private owner of the site, that rent should represent, or that should be equivalent to your rateable value, in theory. Now, there aren't many clubs that I'm aware of, or they're not hundreds and thousands of clubs, which pay market rents for their sites. Commonly, especially if you're renting from a council, they will probably be giving you a discretionary rate or discretionary rent because they see it as their duty to make sure that sports facilities are available to their people in their area. So you might not find that. So what the valuation office will do is they will determine what that rate should be, and that will be worked out on the floor area of the buildings that you occupy. If you've got a clubhouse, it will be the floor area of your clubhouse multiplied by that rate, plus the area of the changing rooms, plus the area of the stores, plus potentially if you've got other things there like an external bar or a stand, a spectator area. All of those things can be valued because if you were coming on to pay a rent for the site, you may pay a bit more because you've got a spectator stand. You may pay a bit more because you've got a larger bar area, etc. Okay, so those are the things that they will be included in how they determine your rateable value. So how do you find your rateable value? So all rateable values for every single property in the country are published on the government's website at www.gov.uk. You can locate yours by visiting www.gov.uk/find business rates, as it says on the screen. I understand these slides will be shared, so don't feel like you have to copy them all down. So you can find your business rates by logging on to the VOA website. At the top left, if you look there, it says there's a sign in button. You don't need to sign in to find your business rate, to find your rateable value. You can just find it, and you can find any rateable value anywhere, not just for rugby clubs, for any sort of property that you like. If you put in that area and then enter your postcode, you'll find a page displaying relevant information. I searched for Harlow Rugby Union Club earlier, and this took a copy of the page that came up when I did that. So this is the page that came up by putting in their postcode. So you'll see something like that. And then you can click on the link, that blue line, which is Harlow Rugby Union Football Club, and that will take you to the valuation. Okay, so that's it. It'll bring up your valuation for you. So here is Harlow Rugby Union Football Club. It's covered over the next 3 slides. This isn't private information because it's available to anybody, so anybody can look at this, and anybody can download it or look at it on the site. But this gives you some idea of what you will see. So the first page you'll come to, if you click on the link, will give you valuations for the property. And if you look on the left-hand side, you can see the words future, current, and previous, and they relate to the rating lists. So current, because I took this today, refers to the 2023 rating list, okay, which is what we're currently paying on. As of the 1st of April, we'll go to the 26 rating list, which is shown on this as future. And the previous rating list, which was the 2017 rating list, is shown as previous. So you can see that Harlow Rugby Club has had different rateable values in each of these periods, all slightly increasing. Okay, and if you want to look at the individual valuation for a particular year, again, you just click on the blue link. So that says 1st of April. So I clicked on the current one, which just takes us on to the next page. And on this page, it shows you how they've calculated the rateable value. So you can see, again, hopefully you can see, you've got on the left-hand side a load of different descriptions of parts of the property. So the top one says the ground floor changing room, the area in meters squared. So, and then a rate that they have applied, okay, which all multiplied together gives a value. So you can look down there, you can see that there are different rates applied to different parts of the building. And generally, I don't know why, but generally, the highest value part is taken to be the lounge or bar area. No idea why in a rugby club that's seen as the most valuable part of the area you can make the most money from, but apparently the valuation officer thinks that is the case. So that is where your rate per square meter applies from, and then different parts of it are valued at slightly different rates depending upon their use. Okay, so all they do is they run across all the areas, the buildings, come up with this value, and at the bottom of the page you can see that the total area that the valuation officer has measured of Harlow Rugby Club is 1,245 square metres, and the value of the buildings there is £49,909. So that will be this on every rugby club. So different rugby clubs will have different amounts there. So what you can do is have a look and make sure that the VO has got the right amount of buildings. Now, it might be that you have made alterations to the rugby club and knocked down an old building. If you haven't told the valuation office that building will probably still be included in your valuation, and you will be paying business rates on it. But equally, if you have made improvements to your club and you have added additional changing rooms or added additional bar area and haven't told the valuation office, that won't show on there, and your rateable value might actually be too low. Okay, so just so that you're aware that your rateable value can go up and down. So the value of the rugby club is not based solely on the value of the buildings, but also on the facilities that are there as well. And these are usually included in what they would call additional details, where they would pick up things like the floodlighting, pitches, stores, paved external areas, etc. So again, we can look here and we can see that Harlow Rugby Club has 5 pitches. These are all grass pitches and they are valued at £1,000 per pitch. Okay, that might vary where you are in the country, and it will vary if you have an artificial grass pitch or if you have some form of hybrid pitch. The value will increase because it's assumed that having a AGP or a hybrid pitch, you'll be able to use it more often, and therefore there's more value you can generate from that sort of pitch. Okay, so there's all sorts of different things that can be included in here, and that when we're looking at an additional value, those are usually at a set amount. So again, Harlow has 2 storage containers. They're storage containers, just I assume, to keep their probably pitch maintenance stuff in. They're £95. They're valued at £95 each storage container. Then you have a section called plant and machinery. Now, this in most instances will be floodlighting. Now, if you have a fixed generator, you might find that that is included in your plant and machinery. You may also find that if you've got something like a system or a sprinkler system to keep your pitch watered, then that will also have value as part of a plant and machinery. Now, they don't value anything that is movable and non-permanent. So if you have a generator that you can move around, that shouldn't be valued. If you have a fixed generator, that would be valued. Okay, so basically anything that's fixed, like your floodlights, that is going to have value to it. Okay, so that goes in the plant and machinery. Most clubs will probably have floodlights, and I would expect your value to be somewhere between £3,000 to £7,000, depending on how many pitches you have floodlight. Okay, so just give you an idea there. And what we have here at the bottom is your total value, which has come out as £63,950 by adding up all the items above. And for Harlow, they've rounded it down to 63,500. It's quite common for the valuation office to round to 1,000 or 500 or £250 when they do their valuation. So when you're looking at that valuation, you can say, well, there might be things missing from it, or there might be things that you that are there that are shown in the valuation that aren't there. What you have to consider is it worth contacting the valuation office to tell them about those differences? You've got to bear in mind, you must declare all of the changes that have happened to a property. So, for instance, if you have a club and you have made an alteration like installing floodlights, but there is no value for plant and machinery in your rateable value, in your calculation of the rateable value, you would have to declare that you've added floodlights. So even if you take away an old changing block that's been demolished and add the floodlights, your rateable value might go up. So it's something you need to consider if you're going to talk about something that is a difference. Is there a risk of it meaning your rateable value and therefore your rates liability might increase? So that's one thing. And we went through the bit earlier about how much you pay. So if you're in receipt of 80% relief, and then you've got a relatively small adjustment to make to your rates liability, only 20% of that are you being charged on. So you've got to consider, actually, is it worth going through the process, the rigmarole of informing the valuation office of these changes when it might only make a really, really small difference to the actual amount of money that you pay. Okay, so these are things to think about. Now, people like WSP Geohern, and we're not the only agent out there, will act for people in order to reduce or review their rateable value, but we do charge people for that, and so will everybody else. So, and we will usually charge on an hourly rate. So you have to be reasonably confident that your rateable value is significantly wrong, that it will affect your rates liability enough for you to contact someone like WSP Geohern or one of the other firms that are out there in order to provide that relief, because it might not make sufficient difference to your actual rates liability to even cover the costs that we would charge you to do it. It's different if you've got a really large rateable value, you don't have 80% relief on there for a charity, and something has changed. That may well be worth doing, because any change now will affect not just this year's rates liability, but the 3 years of this revaluation period. And if once it's corrected, all future valuations the valuation office carries out will be based on the correct areas. So that might be worthwhile looking at. But you've got to weigh up, is the club really going to save enough money to be able to afford paying somebody to look after it for me? You don't have to, you can do it yourself. You don't have to employ an agent to do it. You can do it yourself, just to make that clear. The other thing that you can look at is whether your rate is correct. That's the rate that is paid per square metre. I would only do that by looking against other clubs. So, for instance, if we go back to Harlow, they had a rate of, I think it was £55 paid. Harlow is a modern club. It was built, they moved premises in the mid 2010s, I think it was. Mid 2010s. They moved premises to a purpose-built club. So that will be a top level club in terms of the rate that is applied to the buildings. If you've got a much older building, it should be valued at a lower rate to that. And it will also depend where you are in the country. So the first thing I would do, if you want to look at your rate, if your rate is high, compare it to other clubs you know that you think have better or worse facilities than you. And if your rate is higher than people who you think have better facilities than you, it might be worth challenging the rate. But you do have to think about, is it worthwhile doing this? How much money is the club going to save by doing that? Because the appeal system isn't completely straightforward. There is guidance out there. The valuation office themselves provide you guidance on what to do. But you just need to be careful about whether it's really worthwhile for you setting that hair in motion, setting that process in motion, when it will all fall back on you to make sure it's done. So not saying don't do it, but just think about what you're going to do. And again, you can use the same email address that we gave earlier for us to give you some general advice on that. We won't give you a huge amount of advice, but we'll give you an idea if you're going in the right direction through that helpline. And that covers what I want to talk about on rateable values. So, Dave, back over to you if there are any questions.
I've got a few. There was one question that came in which I did answer, but I want to just make sure that I was correct. So it was a question related to, if a club becomes a charity, the business rate relief of 80% would kick in from the day one it was registered as a charity, or could Correct. It be backdated to the date of the application, I suppose was the question.
Well, it will depend on when the Charity Commission make you a charity from, basically. So, right. I don't know the answer to whether if they accept, whether they go back beyond the date
Yeah. Okay. So that's one to be, but it's generally the general rule of thumb would be from the day you got your piece of paper that said you're a charity kind of thing. Yeah.
Correct. Yeah.
Um, I'll just check if there's any others that have come in. But while I'm doing that, you meant that was really useful that last part. But so what you're saying is that nationally there could be local variations in terms of the rate of value. So I've looked at loads of different clubs from Northumberland down to Cornwall, who were all roughly could all be roughly the same, but there'll be regional and local differences in terms of the ratings as you've gone through there for Harlow.
Yeah. So the rate will be different. So each club, each area will have a different rate that is applied. So in home counties where Harlow is, that's £55. I assume it's relatively high because it's high for a club because it's close to London. If you're further away, especially if you're in the more rural areas, you'll probably find your rate might be £30 or £40. But a lot of it will depend upon your facilities.
Okay, and that go the same because the example you used there, for instance, was Harlow was the rateable value of £1,000 a pitch.
Yeah,
If you're in Northumberland, that would be £1,000. That could be slightly different depending,
it
just
would be different.
because.
Yeah, so they would have based it upon it. So it might be something like £750, but equally they might have valued them at £1,250. Because the way the valuation office um, sorry, I don't know. Because of the way the valuation office value sites or way they build their valuations, they do it locally.
Yeah. Okay. All
So
right.
the guy in Northumberland would have looked at the values in Northumberland and came up with a value for Northumberland.
Okay. All right. Thank you. I'll just have a quick look. I think that is it for this evening. So what I'd just like to say on behalf of everybody on the call, thank you, Anthony, for that. Very, very thought-provoking. Please do remember that we have created a helpline email address. So if you want to just go in there and get some general advice, that is fine. I think we'll be producing a sort of a one pager to go alongside this in due course. And I think the one takeaway I'd take at the beginning is just, with the new bills coming out and the fact that for many clubs there's been a reasonably increase in rates. We've heard all about the pubs, etc., but there are some reasonably. Is just to make sure that you are paying the right amount and that there isn't anything untoward in there that you suddenly find that you can't deal with. So, and obviously they're all landing in this. Well, they're probably landed by now, but they're landing around about now, aren't they?
Yeah, so the rates demands from the council should have been prepared in February and March. You probably should have received them, or they should have been sent to the clubs. If you haven't picked them up, they're probably sitting on the mat waiting for you. The other
Anyway,
the other thing that you can do, sorry, Dave. The other
that's all right.
thing that the clubs can do is if you haven't applied for the retail hospitality and leisure relief for the previous years, and you do qualify for it, get your application in tomorrow.
Useful advice. Anyway, thank you, Anthony, and thank you to those that have listened this evening. We will be sending out a recording and the slides, etc., following this, so you'll be able to go back and hone on any of the information that you needed to. Thank you.